This is Justin Pulitzer. This is my midweek video for Wednesday, February 2nd, 2022. Happy Lunar New Year for my Chinese friends, and for the rest of us, happy Groundhog Day. Yes, we're going to get to find out if we have more winter or an early spring. I'm guessing we're going to usually... Isn't it always the long winter? When have we ever gotten the short winter? I'm still waiting for the short winter. So, a few things to discuss. First and foremost, sentiment. Pretty big pullback from the, euphoria that went into the Fed. I mean, I don't know why anyone thought Powell was going to be super dovish, and we're roughly back to where we were the prior couple of weeks. As far as the CNN gauge, they'd been a little more bullish for longer, but now they're feeling the fear. Previous close was 38, this is 34, so even with a pretty good close the last couple days, people are getting more bearish. That's encouraging. Disbelief in the rally. That is something to pay attention to. But there's something else to pay attention to, and that is price action. And a couple of things that have me a little concerned, and we'll go through this, is that we're getting close to, if not into, the levels we talked about in the weekend video for resistance if we do see the bounce this week, which we thought there could be. And we have something of a catalyst coming up on Friday, and that is the jobs number. The last, I think, 3 numbers have been just terrible. I don't expect this one to be any better. Maybe a little bit, because some of the band-aids may have came off, but I know some companies are still enforcing it. I'm just not optimistic about the jobs number. So if we're up too much into Friday, we've all been seeing these weak markets and then strong Fridays. We may have a strong market and then this week the opposite, a weak Friday. So let's be a little careful if we come in guns blazing into the jobs number. We're going to have a little glimpse at it with the ADP number, but I feel like a lot of people are make too much of the ADP number. They think just because that number is great, we're going to have like a good jobs number. Last time we had a good ADP number and a really crappy jobs number. So just keep that in mind, that they aren't always the same. Then we'll get a little jobless claims on Thursday. We'll get ISM service index, get some PMI action, and then we'll do the freak out Friday. So that's what's coming. A few things to take a look at on our checklist. COVID, number 1, improving. New York, the numbers are, I think, 10% of where they were just a couple of weeks ago, so that is fantastic. As far as the Fed goes, that's not good. I love these B of A, like B of A today, that I forget her name, Submenian or whatever her name is, and now Goldman Sachs. They're like racing each other to see how many hikes they can price in. I think they're up to 7. Which reminds me of something about Mary. 7-minute abs. They're all kind of competing to see who could have the highest amount of rate hikes. So, and that also reminds me of I heard a guy on the halftime report the other day use my ab reference. So apparently somebody's watching my videos. Yes, just saying. So, the idea is that, you see all these infomercials and you get 5-minute abs, 3-minute abs, 2-minute abs. It's like, why would you want 5-minute abs when you could have 2-minute abs? You see what I mean? So they're all racing each other in this silly idea. I'll just tell you, if we have 7 hikes, I'm just going to put this out there right now. If we do have 7 hikes, every day the market opens, it's a sale. Every single day that it opens, if we're going to get 7 hikes, is a day to sell. I don't believe we're going to get 7 hikes, but, they're going to talk this smack. The economy, not doing well. We will likely see a second half rebound because of less COVID like we saw last year, but in general, not good. And under the Obama years in particular, and I extend that to the Biden years because it's really the same, and I would venture to say even the same president behind the scenes, but that's a whole other conversation, and maybe for another time after we've had a couple of drinks out on the town. So I think that we're back into that economy, that stall speed, stagflation, no growth economy. So not good. And without QE, that isn't so great for the market. But we will see. There's always the rotation back into the big cap techs that obviously with Google and their 20-for-1 stock split and their $50 billion buyback and good numbers, that's good. And I think that's also something else that will maybe cushion the blow of the market a little bit on the way down, is you have these companies with these huge stockpiles of cash, and now they're going to be out of their quiet period after they report earnings, and they'll start buying back stock. They've been in a bit of a quiet period, which is always somewhat problematic for stocks. We have to look at two factors every day to know which way the wind blows. The first is bond yields, and the second is Bitcoin. I know it sounds almost ridiculous, but if you were programming an algorithm, you'd use two-factor authentication in that regard, and those two would be the ones that I would use. So we got to look at bond yields. If they're benign or good, meaning they're coming down, that's good. So sideways to lower is good. If they're going lower too fast, it's sort of like Daedalus and Icarus. We're flying a little too close to the sun in that regard, and people are going to start saying recession. But if we're plunging and going too low, we're going to fall into the ocean, right? So it's sort of a heads I win, tails you lose situation in that regard. So I know it's a little complicated, but basically what we need to see is sideways to lower rates, but not lower too fast. Or if they're going to go higher, we need sideways to higher, but not higher too fast, if that makes sense. We need slower moves. I'm a little worried about the supply chain situation. China keeps shutting down ports and cities the size of New York and larger, like almost every other day. COVID is raging wild in China right now. I think they have their own variant that they're not disclosing, but that's a whole other conversation. And I have reason to believe that. It's not just me pontificating. I have a few sources I've spoken to, not the same source from the original COVID, but some other people I talked to. And there might be. We'll see. They're claiming it's Omicron. We'll see. I really do hope it's that is the case. So that's the macro situation we have. A few things we discussed. Remember we talked about earnings with the big FANG type names. Usually the first couple aren't so good, or they're good, and then the next couple either aren't so good or good. So the first couple in this instance weren't so good. We had the blow up in Netflix, and then we had a drop in pop, like in Microsoft, and what was the other one? There was a couple other ones. I can't think of them offhand for whatever reason. But now we have Google. So we're into the good situation. I'm a little curious to see what happens with Meta. I hate that name. I really I don't like it. We'll just call them Facebook. So I'm curious to see what happens with Facebook. Usually when Google's up, Facebook is up with Google, and then it goes down on their own numbers. But Google, I don't think Google would have held its gains quite as well as if they didn't do the 20-for-1 split. Now, the funny thing about the 20-for-1 split is it doesn't happen until July. So you have to own the stock as of July 1st, and then you get the shares 2 weeks later on the 15th. I don't really understand that, but that's what they're doing. So we'll do a little polling on Meta, and I'll just tell you, it's really got to hold like 299, 300. If it loses that, it's a short. We'll talk about some levels on Google as well. And then we've got Amazon on Thursday, which is probably going to get a big bump because of Google. But I think the thing that was the most important for Amazon was what happened with UPS today. Now, I'm still a little undecided whether the UPS beat is good for Amazon or bad in one regard, because if UPS is charging more, that means Amazon is paying more, and it's hurting their already kind of thin margins. But if UPS is doing so much volume, does that mean Amazon is doing so much more volume as well? So it's a little bit of a two-edged sword, a double-edged sword in that regard. I'm going to say I think it's probably decent news for Amazon, but the way Amazon's been trading, well, we're going to talk about some of the levels and what I think needs to happen. I'm not thrilled that it's rebounding ahead of the number. And by the way, who told you so with PayPal? Yeah, I was very, very bullish on the way up. We tried buying the dip, talked about getting stopped out, and then I said I thought it needed the kind of a final whoosh flush, because you got the clown brigade. You got Kramer, you got that guy Brown on TV, and then I think the Nigerian brothers also were in it, and they're all like, we're super bullish on this, and that said to me that there wasn't any capitulation. And when you got all those guys kind of lined up, I actually kind of like the Nigerians, by the way. The other two I don't really like so much, Kramer and Brown. But I think the setup was there for kind of a move lower, and now I think it's going to have an opportunity to be a buy the dip after you get finally get all the downgrades that are going to likely come in the next day or two, or even the next week, and then you're going to finally get some capitulation from these guys who have been buoying the stock. If Kramer, I would love for Kramer to come on tomorrow and say, it's a sell, and he's calling it quits for his charitable trust or whatever the F he runs these days. So that's kind of what I'm looking, a little counter programming. I didn't really mean to get into this kind of big discussion before we go through charts, but I think it's sometimes good to kind of set the table and set the mood in that regard. Let's dive into it here, because I have a few important things for us to discuss. Number one, we were right about the VIX. Talked about the pop up. We talked about it making lower highs. We talked about the Fed day range. We never took out the Fed day range high, did we? No. Maybe by, let's see, what was the high of day that day? 33.04. Yeah, we never took it out. This was 33. And then once we took out the Fed day low, was down, down, down. But here's the thing. Keep an eye on a couple of key levels. What are those? 23.01 and 25.20. If we get above those, I think we're coming back into 27s and maybe even 29, but I'm sort of thinking we could potentially go a little bit lower, particularly with this Google situation. I mean, Google is going to be a buy now on any dip. So here's the thing. If you want to buy one of the big FANG names now on any big market flushes or dips, the go-to name now is Google, because we know they have the stock split coming up in July, and who doesn't want to own Google for a 20-for-1 stock split? Just saying. That's now the go-to name for us going forward. So mark that down. We will talk about some key levels and a couple of strategies I like to play it once we get to Google, but we're not going to start with Google because I got to keep you guys interested to watch the damn video. So if we do come down here, I'm thinking maybe 19s. But I don't know if we're going to get much lower than that. That would be a trend touch here, and it would be coming down from the top hard and fast with kind of up one little speed bump. So then I think we got to buy some puts as hedges on S&P if we could get down to the 200 MA. Okay, just saying. Let's talk about TLT and what was I talking about with too fast or too slow, and let me just show you. So we have a bit of a diamond pattern here. If you're a technician aficionado, you know exactly what I'm talking about, but we do have a diamond pattern here forming. And if you don't want to go with the diamond, you could just do it's sort of like a bear flag wedge here. We saw that here similarly, and then that eventually broke to the downside. The question now is this going to break to the downside here, or are we going to break to the upside? The 20 MA and the downtrend have been the resistance, so if we can power up above those, I do think we could get a check back to the 200 MA and maybe the backside of the trend line. And guess what that would do for NASDAQ and for FANG? It would be bullish. It would be good. I think that's enough, not a big enough move that it would spook the market. But if we start really ramping here, everyone's going to be talking about recession. And when we talk about PE multiples, you have to factor in a few things. One of those is the earnings. And if the earnings are dropping hardcore, that's not so good. The whole idea is to have stable or better earnings and lower interest rates, which are the denominator. Think of it as numerator and denominator. And you don't want to have a plunging numerator, but you do want to have a plunging denominator. Okay? That's the top number and the bottom number, by the way. I know, you guys know. So that's the key here. We can't have one of these hardcore push downs. That would be not so good for NASDAQ. And then we'd be talking about the COVID low at 139.01, and if that cracks, nearly. Then we're talking about a whole other ball game of interest rates, about maybe targeting 2.5% to 3% rather than the 2%. Now, if we pop up here, I think that would be good, but if we pop too hard too fast, initially it's problematic, but if it stabilizes, then it becomes good. If you have any questions about that, just message me. If not, we'll just move on. TNX, this is the nightmare chart of the inverted head and shoulders and cup and handle, and this is the 10-year. You can't buy or trade this, but it is a tracking instrument. And we are dangerously close to a big breakout here. And if we do break out here, we're talking about a move up to channel high. And if that happens, the market's not going to like that very much. I'm just saying, if we get in a trending situation here, could be problematic. But right now, we're kind of just pulling back, barely. But we are pulling back here. So that's, I think, why we've had some life in some of these names. You got to really get below 1691 on TNX to kind of say maybe this was a look above and fail. But as long as that holds, it's still just a consolidation above the breakout. So, yeah, there's that. As far as the dollar goes, this is going to be a problem for companies with earnings. Remember Facebook a few years ago was having problems with the high dollar? I'm curious to see if that could be the fly in the ointment on this quarter. And be leery if they rise too far with Google. Remember what we always talk about. Though it doesn't happen every earnings, but it happens often enough that it's significant. And I'm not really hearing anyone talk about it this earnings season like they've done in the past. So it might be on. We got the channel high. We are pulling back. But will the strong dollar hurt Facebook earnings? I know they're having a good quarter with regard to Instagram. By the way, this is a look above and fail here of the dollar. So for this to get bullish again, it's got to get back up over 96.938. Anything below there can chop and go lower. So this could be potentially problematic for Facebook. Just keep that in mind. But I will be leery if they rally too much with Google. That's always kind of my rules. If Google rallies too hard, Facebook usually goes with it, and then it kind of goes the opposite way on their own earnings. But this might be a little bit of a different situation because of the Google stock split. But I want to see those Facebook numbers. I want to make sure it holds 300. If it can hold 300, knock yourself out, be long. If it can't, then be short. Pretty simple there. So the other chart I look at when I want to scare myself is Bitcoin. I don't want to break my arm off patting myself on the back, but we've been all over the big moves in Bitcoin. I talked about it up here, a look above and fail, and I said, I remember, I have to go back. We know the dates because it was in November. I said that if this starts breaking, it usually is a leading indicator for NASDAQ. And we all know how that played out, don't we? So here's the thing. We filled in pretty much the gap and we're now bouncing, but we're right down to the downtrend line and we're still below the prior support, which is sort of like a little mini neckline of a very large head and shoulders. That would resolve if it completed with a move down to like 10,000. Could that happen? I think it could. I don't know that it will, but I do think it's possible. I would feel much, much better about being long Bitcoin if it got back up over the 40,085 neckline and really over 41,040 and held above the 20 MA, which was the resistance the last time. And that's running kind of close to the downtrend line, so let's see. Right now, and I called the ball a couple of days ago, I thought we were kind of going sideways to higher, but now we're kind of at a decision point. So let's see what happens here. If Bitcoin starts rallying and taking off, I'll say that that's a leading indicator for NASDAQ. The door swings both ways. So keep your eye on rates and Bitcoin. And honestly, I know this is going to sound ridiculous. Just if you want to watch one, just watch Bitcoin. That's the one that I think is the leading indicator, because it's kind of a risk on, risk off situation. It's all the same people that own that and Tesla. You know, the people who buy the weekly Tesla calls are the people who own Bitcoin. I'm just telling you. I know them. I know them all. And they used to be the old gold bulls from 2011. If you're talking about like kind of the old timers. But that's it. So gold didn't quite get down to my 64.42 where I was looking to kind of buy the dip. I'll keep it simple for you. If you want to own it, just make sure it holds the 100 MA here and stays up above the 50. If it can do that, it could bounce. If not, it's going to go lower. Gold is very, very finicky chart, and I like to buy it when it's trending, and it is not at the moment. It's choppy and sloppy, and that's not when I like to own gold usually. But if if we do get massive deflation with a big, crashing stock market, yeah, gold will probably outperform, but it'll still go down. Everyone talks about the 2008 and 2009 crash, and you'll listen to guys like Peter Schiff, but what they don't tell you is that gold still went down big. It just didn't go down as much as stocks, okay? So you could be like a Dennis Gartman, own the NASDAQ in gold terms, right? Sorry, I know I'm in rare form tonight. I don't know why, but I am. Probably because I've been up for many, many, many hours. Very long day for me. So, not even market related wise. I had to take my dog in for a procedure, and it was just a very long, stressful day. Anyway, he's okay, by the way. It was just a cleaning, and I had to take out a small little baby tooth, but he's fine. Anyway, SMH. So we got the reference low, the neckline, and we're bouncing. Who's been talking about building out a right shoulder? Everyone here was like, oh, we're just going to fall right through. No. You don't usually crash from all-time highs. The exception to that, and maybe the only exception that I've seen, is COVID. And that was one we were on the right side of. I told you guys it was more serious. I told you guys to be careful. And we avoided a 35% drawdown in pretty much a straight line. So yeah, and then I listen, this is all documented in tweets. If you want, I'll pull them up. If someone says, JP, you're lying, I also called the bottom. I said, this is overdone now. And after that, the next day was the rally that ignited it wasn't the dead low, but it was the day before the big gap up that ignited the rally higher. So it's all time stamped. Anyway, and I have a folder for it. It's called like the COVID bottom folder. I'll bring it up for you guys on the weekend video, because I know some of you are new and you're probably saying this guy's full of beans. I assure you it's the truth. So, and some of you who have been with me for a while will absolutely attest to that. So if you want to tweet out and, say that, it would be welcome. So SMH, we're not back up to the 100 MA. So SMH is lagging the NASDAQ. That has me a little cautious on the rally, just a little bit. Because SMH is usually the leader, right? It's not the laggard, and maybe that's because the chip crisis is kind of coming to an end. I think Apple said that they're seeing supply chains open up a little. I think that was also why Apple extended the rally. It was originally a bit of a pop and flop, but it kind of firmed up, and I think it was because of that. So what now? We have a green channel, and we have a low of day, a Tuesday low of day. 270.21. So it's right on the 200 MA. Let's just use that. If we even come down and hold, it's maybe more neutral, but as long as we're above it, I think we could still rally up to the 100 MA and 20 MA confluence, the kind of danger zone up here that I have mapped out ending at 28814, and the lower end of this was what? 284.92, but let's say that that's 285.94 at the moment, because we wanted it really to be the 100 MA. So this area here could be the next big resistance point. I'm also curious, I'm going to have to can my assistant because they didn't put on the fib retracement here. So this is the 38.2. That's usually where weak bounces and weak markets die. Stronger markets usually get up to 50% or 61.8 area. So if we can hold above 274.5, we really at the very least should get up to 282.97. And I want to just scroll right for you. There's no volume here. So it wouldn't surprise me even if we got up to the 288.14 and maybe even made a run. I don't know if we're going to get to 50 MA. That would be something, but that to me would be a dead-on balls short because look, that's the next volume distribution. So if you want to put on like a hedge to be short SMH, sell like 50 MA calls and like at let's say 300, and then buy like 310s or 320s. At least so the hedge is capped off there. Anything below the 38.2 and the 20 MA risks a rotation back down to the lows. So we'll keep it that simple. So we've got a few things going for us here. In the after hours, we're up to 282, by the way. So we are up to the 50% fib. You can see that here, 282.25. Why did that happen? Well, AMD was good. They had a good quarter. So now we're going to see. Do we reject at the 50 and come back to the 38.2, or do we sail through the 50 and get up to the 100 MA, the 288, and maybe even the 61.8 here at 291.43? So I would say that this, by the way, would be the right shoulder here, 276.69. So anything. And look, I don't want to say that the head and shoulders is invalidated because we're above that level. It's possible we have a higher right shoulder. I will stipulate that it's harder to get the right-hand translation to the downside, but I've seen it many times. And don't get too caught up on that. I know in textbooks, the right shoulder higher, it makes it harder. Let me tell you, when I've seen right shoulders fail to the point where they have retracements that are so deep and so far that you wouldn't even know, you can't even see the head and shoulders anymore on the chart because the stock is so far down. So just keep that in mind here, that we could still build it out. We could get up a little bit higher. And if we do get a little bit higher, you could know that you're seeing the right-hand translation here if we get back through the 276.69. Yes, something to consider. And also the 200 MA, by the way, which is still rising. So it's going to be show me time here at the 50% fib. Speaking of AMD, which had a pretty honey of a decline here, a check back to the breakout that bounced, and it's now up to, where's 128? So there is a little bit more room here. You're right up to the 100 MA, which was the old support. This may become resistance. So let's see if we can get over that in the regular trading hour session, or if it fades right away, or if it doesn't. What happens, here's the question for you. This is a little trick I use. Look at the after hours high. By the way, the old reference low was 130.60. Look where we stopped. 5 cents to the tick. Now, let's say tomorrow morning we open up, okay? And we open below 130.65. Where's your stop? Opening 5-minute low, is my opinion. You could use 15-minute, that's fine too, but for me, I'm on JP time here, 5-minute low. If we open up above here, you just use that as your stop. It's got to stay above 130.65. And if it does, it can keep going. So very simple setup here. If you're long, I'd use the opening 5. If you want to give it the opening 15-minute low, that's fine. But anything below the overnight high, it needs to clear that. Now, if we just go sideways all day here, up here in the higher end of the range, that's okay. I don't think that it gets too bearish unless you really get below 125.59. But I wouldn't be long if we have a lower high in the open and we're below the opening 5-minute low. I'd start booking profits. Do you have to take it all off? I don't know about that, but you don't want to get Texaned. Texan gave it all back the first day, right? It subsequently bounced, but I mean, look what happened. You had this big move up, boom, back down. TNX, what am I looking? TXN. I'm like, wait a minute, this isn't my office. So yeah, this big move up, it gave it all back and then some, but now we're kind of rebounding with the market. You don't want to give back all that earnings pop, so trust me. Use some stops. Now we had a trend line, channel, and now we have a secondary channel, which we haven't broken out of yet, and we're right up to the 20 MA. I would probably use some strength in this to trim and maybe book some profits. That's sort of what I'm thinking, because even with the good numbers, we never even got back up to where we were a few sessions before that. And that's really the story with a lot of these stocks. Google seems to be the exception here. Remember, I said in the weekend video, if any one of these stocks, I said the chart wasn't looking good, but if any one of these stocks could do it, it would be Google. Go back and look. It's all timestamped. AVGO. This was like an untouchable stock. Market was pulling back. AVGO's like, go higher. But I did warn up here that if the market did start, it would probably be a good idea to book some profits. If the market starts going south, this will eventually get hit, and get hit it did. Get hit it did, indeed. We didn't come back fully to retest the breakout, but we are bouncing here. So how far and how long can the bounce go? The problem for me is it's used up a lot of it. We're already back up to the half back when we filled the gap here. So I probably would be looking to book some profits in AVGO. If it got up to 614.97, I'd be fully out. That's the 61.8. Unless you think the market's going to make new highs. Is the Fed going to not raise interest rates? Like I told you, if the Fed does 7 hikes next year, every day the market's open is a sale. I don't think they're doing that, by the way. I'll be shocked if they do 7 hikes. I don't even know if they're going to do more than 3 or 4 tops. I don't even know about 3 or 4. It might only be 1 or 2. Remember the last time after 2018, I think they did 2, and that was it. They got smacked. So right here is the key, 50% fib. If we get above it, then we think 61.8. But if we stall at the 50, I'd get out. So I like tomorrow, if AVGO's up on NVIDIA, on AMD and all that, I'd be booking some profits. NVIDIA, speaking of which, this was also kind of an untouchable stock for a long time. By the way, AVGO was barely up after hours. NVIDIA, though, is up a bit. So NVIDIA's up to 258. Let's see. That's a little bit below the 100 MA, which was kind of old support here. So I'd probably be trimming into there. I'd be trimming more into 271.45 all the way through 280. The 50 MA would be the absolute, I think, end of the move. So any further strength in this stock up into we filled this gap already. We don't need this in here anymore. Anything up into where this broke down from, the 271.45 to 280.38, I like booking there. And probably a little at some at the 100 MA. And I would, if this keeps rallying too hard into the earnings, I'd be a little careful. I do like that this is down ahead of earnings, so it does probably continue rallying ahead of the number, particularly with what AMD did. If it rallies too hard, just be careful. Let's take a look at oil. So oil is still going. And we talked about this getting up to 92.22. The next fib is 101.64. This is a huge drag on the now U.S. economy because we're producing much less. It's a huge drag on Europe, and it's a huge drag on Asia. And as long as oil stays stubborn, the Fed is going to be stubborn. It's just my opinion. I think that's kind of it's a very visual gauge. It's sort of, it's technically not an inflation they would really consider like in a lot of their workings, but it's a very easy one to understand. So as long as we're above 85.41, the risk is higher. As long as it's above the 10 and 20 MA, the risk is higher. If it gets below the 10 and 20 MA, then we could have more pullback. That's what happened here. So unfortunately, it seems like it's going to go a little bit higher. Exxon Mobil. Wow, did they have some earnings report? I was listening to the CEO. I was actually in my car going over the 59th Street Bridge this morning. And I was listening to the interview. And I was just like, wow. I was like, this is some bullish interview. But I am a little worried that this is up a lot. It got past the 77.75, which was sort of my ultimate end range. If we do a 2.618, and this would be really stretched, you know, we're looking about 85.68. So if you're long this, I would get out there. Yeah, I think that this is a fair assessment to use. And I wouldn't let it get below 80.35 on you now. And for sure not below 77.75. But Exxon had a really good quarter. And but I will say this, the money flow here is not confirming it. Not just yet. So they may keep pushing it up, but I think it's on fumes. Although you'd never know that today. Exxon, I'll tell you, years ago, in like the 90s, a day where Exxon was up like $2 was like a huge move. To see this thing up $4 or $5, that's big league. Before this nastiness, the range in Exxon used to kind of be 60s to 80s. So maybe we're reestablishing that order. But now we're getting close to the 80s, so it probably is a good area to trim into. My humblest of opinions. SPY. All right, let's talk. So a couple of things to note. One is that we got above the 200 MA. We got above the Fed day high. And I think my exact words were, if we're up on Monday, we're up. And we were indeed up. Today, Tuesday, we had a lower high, but we were again up. Here's the problem, and I'm going to make this a gray area. Where did I say I thought we'd rally to? This area, right? Between 451.14 and the 100 MA, which is 455.56. Look where we are in the after hours. We're right up to the 100 MA. That was the old support. So here's the question. And we have the 61.8 just a little bit above us. There are going to be some sellers there. Could we overshoot and get up to the 50 MA? Yeah, it's possible. I think by the way, I think if we do shoot up right to the 50 MA, it's a short. 461.68. That's the backside of this old yellow trend line. It's the downtrend line and the 50 days. So if you want to sell out of the money call spreads as a hedge, this could be a low strike. Or if you want to use the 78.6, that's fine too. 467 or 461, dealer's choice there, depending on the kind of risk you want to have. I do know that this swing low here was 456.60, and guys like me who see this stuff on charts are going to sell into it. So I think we could be up a little bit more. We're probably going to open higher, at least we are as of now. But it might be some areas to start trimming into as opposed to chasing, because we are getting close to the downtrend line and we are getting into past supports, which can become resistance. $7.20. Expected move into the Friday expiration. IWM still looks pretty crappy. It's not even back to the 208s, 209s breakdown level. It's trying to bounce, but it's kind of like, I mean, I guess AMC could have always come alive again and get this thing going. But I think that this between 208s and 211s is a short, at least initially. So IWM, maybe a little bit more to go, but not acting well. $4.96. And by the way, if KRE starts collapsing, meaning interest rates start going lower, it's not going to help IWM one little bit. Expected move in IWM is $4.96, which I already had said, but I wanted to repeat. So the Dow, DIA, $4.80 is the expected move. So there's some good news and some bad news, as they say. The bad news is we're up a lot. We're already up a lot. We're already almost to the 61.8. And I think the 61.8 and 50-day, and if we do somehow get up to 356.60, this was an old breakout, and this is where this broke down from. Let me re-render. It's the technical term for redraw. I think anywhere from the 61.8 all the way up here to 356.60 is a good area to sell into. Okay, so good areas to book profits into. If you're long or you're looking to short, let it break back below 350.42 to the 200 MA. Anything below 350, I think this thing gets smashed. All right, so let's set that alert. I'm just going to use I'm not even going to use the low day. I'm just going to use the 200 MA. So 349.99. Row short. And where will I think this pulls back to? Probably the 38.2. Probably a nice little $5 move. $4.80 there. Once again, the Qs. Everyone wants to know what the Qs are going to do here. Expected move is $8.37. Now, I'm very, very curious to see how this reacts tomorrow with Google and the news it had. So we're up to, in the overnight, 369. Look where the last support was, and the downtrend and the 20 MA. We're right there. Yeah, probably a good area to book some profits into. All the way, I know this is going to sound crazy. It's almost a 9-point range, but all the way from there up into 378.90 is good areas to sell into. The 100 MA had been prior support. The 100 MA will likely be there by the time we get there, but it would be a trend break. So could we overshoot to the 50 MA and get to the channel high? Because look, we're now clearly respecting the green channel, right? We had to look below and fail. Here we had to hold. It is possible we rotate all the way up there. So into strength here, if you're looking to sell out of the money or call spreads as a hedge, you could use 384 or 392 as the low strike, the 50 MA or the 78.6. Okay. I think that this 61.8 area and the 100 MA will likely be some stiffer resistance. And we'll see here, first and foremost, this should really be broken up a little bit into two areas of key resistance. And that's going to be here, right here. And the second one, I'm going to do duplicate drawing, is right here. It's really right here, though. This is box, right? From the 378.90 all the way up to the 50 MA. So it's kind of this area, but I would use the 61.8. I could even, you know what, I don't want to make this too complicated, but I'm going to make it three distinct areas. That one. Oh, what am I doing? Let me copy it. Duplicate drawing. I'm going to bring it up here. So these are the three areas I like selling into. And I'd be peppering orders out right now if you have interest in the Qs at these three distinct levels of resistance. This one being the first one and the most important because it's the 50% fib and the last pivotal swing low, and we're right there. So do or die time tomorrow with the Qs. High noon at the Qs. XBI, we got the bounce. I still kind of like this one if the market stays firm. But this is down a ton and could bounce all the way up to 106s. But just keep trailing up stops. I wouldn't let it get below the 10 MA, at least on your 91s. Very simple there. I'm going to skip a couple of them. I was going to do mRNA and Pfizer. I'll do those in the midweek or the weekend video. Let's talk ARK for a sec. So I'm a little upset with Cathie Wood's stock not getting right down into the 58s to 60s, but it is bouncing. So I'm very curious to see if $80 resists, because that was a minor swing low that it didn't last very long. So I don't count it as an really like key pivotal low, but this like 87 to 89 was very key because that bounced several times. So I think we'll see what happens here with the 80. If that'll probably resist at least initially. The 20 MA has frankly been some resistance. So if you can clear the 20 MA, I wouldn't even be surprised to see this get up to like the channel high, because it had like kind of the look below and fail, and we know the trend. So it's really going to be do or die here at the 20 MA. Above, I think, could continue to rally. Below, I think, is not good. A couple of the Cathie Wood type of stocks are starting to look pretty good, actually. And one of them is Robinhood. I know, I almost want to like throw up in my mouth a little saying that. And this was a stock I hated for the whole ride down. I started to warm up to it a little in the 19s, but when that didn't hold, it was look out below. So here's the thing. Robinhood reported a stinko number, and it didn't go down on bad earnings. And it went up the next day, and then it went up again the day after. So I think the low is in for Robinhood. I like buying it on dips now. I do. I think it could be a takeover target. I think it could, do things. If Bitcoin turns around, if the market turns around, I'm thinking, I hope I'm not being too ambitious. And I probably am, but maybe the 38.2, 38.51. I'll be out at 33.25 if we can get back to that kind of like IPO-ish breakdown spot. Because look, it held here for a while. Let me get rid of this alert. It held here for a while, and then once that broke, that's really where this got liquidated. Probably end of the year, liquidation because it was a shitty IPO. Another one of her holdings is Tesla. Now, I wish Elon Musk would do a, 10-for-1 split again. The stock would probably be at new highs. So we got down to the 200 MA and bounced, and now we're holding roughly. Look, I'm going to keep it really simple for you. If Tesla has to hold 905 to 900. The low of day on Tuesday was 905, so let's just use 905. If it can hold there, I think it's sideways to higher. If it gets below there, I think it's sideways to lower. The targets here, I think, would be maximum end range would be 1028, 1030. That's the 50 MA and the downtrend. So if you're looking to sell out of the money calls, that would be kind of the strike there or above, I think would be good sales. To hedge or what have you. So if you want to buy the shares, sell the 1030 calls and use a 905 stop. How's that? Kind of like that trade, actually. Netflix, is the low in? It might be, actually. I'm sort of debating whether it is or it isn't. I did a poll on it. I don't know why I don't have those results right away. Let me see if I can pull them up. But a couple of things happened here. One is it finally got the last flush we were looking for to 385. That was my downside target. It actually overshot it a bit down to 350s. But 47% of people think it bottomed. 40% think no. And then 13% think they're unsure, and it's 149 votes. So a couple of things that have me thinking it could be the low. One is, really the most important is Reed Hastings bought $20 million worth of stock. He's the CEO. That's a lot of money. It's not quite 100 million like Musk has, thrown around, but he's not as rich as Elon Musk. So I think we could keep bouncing here, maybe a little further to the 20 MA, which has been the resistance. But I'm starting to think Netflix could be, as long as the market holds in, maybe we got to buy the dip situation here. 409.15 was the high of day from the dump bar. If you want to buy dips, that's your stop. Very, very simple. But 50% fib is the probably the max end range, or really the gap fill here to 507s. But it looks like the low could be in for a bit, at least to me. I actually thought Bill Ackman buying it was more of a sign that it hadn't bottomed, to be honest. But once I heard Reed Hastings, that kind of, shut my mouth up a little bit with that. So, yeah, I think you can buy the dip a little in Netflix as long as the market holds in. If the NASDAQ starts puking again, Netflix will do as well. All right, so Microsoft. What do you need to know about Microsoft other than it held 280? You had to look below and fail. This was my end range. Remember we talked about this? Now I think you can trail up your stop to just 305. Very simple. Just use 305 as a stop. End range to me would be up here around 317 quarter. If it can get there, I'd be booking a good deal of it now, though, if you bought it. At least half, I think. It's up at 308s in the after hours, so hopefully it gets a little bit more bounce there. But that would be it for me. That will be it for me. Apple. So, Apple was a little interesting on their numbers. I thought they were going to be a pop, so we got that right. I thought it was going to be a fade. We got that right. What I didn't think was going to happen was that it was going to recapture the fade and turn around bullish right away. And here's the thing, though. We're right up to the old channel high. So I unfortunately do think it's probably a good sale here. You have a dubstep situation here, though. So if you want to use 172.31, for those of you who are using real technical terms, not JP terms, it's an inside harami. I know that, but you know, what sounds better, an inside harami or the dubstep? Obviously the dubstep. So you got this move up. This is the stop now, 172.31. Anything below there you can try short with either a stop at the close at 174.61 or above the high at 174.84. Anything above the 2-day high remains along, probably back to the old all-time high, and maybe even getting the 200 level. So if this gets above 175 and sticks, it's going to go higher. So 175.01. Could say row long. Where would the stop be? Well, very simple. Could either use, I think the close is a little bit too tight, so I'd probably use VWAP 173.68, or you could just use the low of day if you're a true purist, 172.31. I'd probably use the stop that below the low, though. Google, oh man. What a quarter. What? $50 billion buyback, a 20-for-1 split, massive beat. I mean, yeah, you're talking over like a $4 beat. Yeah, okay. So what now? Well, it's over 3,000 in the after hours, so just use 3,000 as a stop on at least part, I think. It's got to hold 2925.08, or else there's something wrong. Because that really, this was the old high from 9.1. That really should be the high now. I think that Google will, even on dips, is a buy because of the stock split. So I'm thinking it might have a pin because of 3,000 this week, although we're kind of far out, right? It's only going to be Wednesday, and you got Thursday, Friday. That could be readjusted. You know, if this really starts beasting through 3,000, you could see delta hedging from the options, the market makers, and this could really accelerate because then they'd have to buy stock to to cover their positions. So I'm gonna keep an eye on this. They're gonna probably try and pin it at 3,000, but if they can't, this thing could really accelerate. It's just mechanics of the market. The really weird thing about this, and maybe they did this because they just want their stock to hold up. July 1st, you have to own the stock to get in, for the split, and then July 15th, they're giving the shares. Pretty cray. Facebook. It's up to 330, which is a key kind of old breakout level. I'm a little leery of them rallying this ahead of the number, but I don't know. I just sort of feel like Facebook's going to have a good quarter. So maybe wait until after the quarter because Google rallied and then this is rallying on Google. But if Facebook is good, it's going to be good, because I know they have some good Instagram numbers. So the key for me is if it can clear the 100 MA, that's been the resistance. I think if it can clear and hold after hours, you could just buy it after hours on the on the earnings. But if it can't, then step away. Shopify will do well with Facebook. It's probably up because of Google a little. The 20 MA has been the resistance, so maybe there's a little more room up to the 20 MA. Makes some sense to me. That was the last resistance, and it may be again. We'll see. Be leery if this rallies too hard into their number. Actually was a little surprised this wasn't down after the shellacking PayPal got. Speaking of PayPal, I'm very proud of myself for a couple of things. One is I had been short PayPal, but then was long, and then the long lost some money. But I wasn't long after this broke down. So I was in this kind of chop, and it started breaking, and I was out, and then it broke down. I know it bounced back, and I was saying to myself today, I was like, is this really going to run on numbers? And I was like debating buying a call spread. And I said to myself, I said, JP, I literally said this to myself. I said, are you right, or do you want to be right? And I said, this would be an instance of me more wanting to be right. I think the move is going to be lower. I don't know why. I just was because I don't feel that enough people got squeezing. Now I think they're getting their necks wrung out. With the stock down at 144. I mean, the big 2 times range is 139.04. There's a gap fill down here too. This is, again, I have it on my mobile chart. 128.31. Is that it? Let's see. I really hate, see, I had it in here. It changes the color. This is just unbelievable. This was pink, and now it's like, 128.31. I'm going to set an alert there. I don't know if it's going to get down there, but it really ought to. If it gets down there, I'm going to sell out of the money puts, or just buy the stock. I think that this is going to be the flush that kind of gets everybody. Now, I'm going to be mindful of a couple of things. Let me show you what that is. One thing to note, and I just know this from experience, when a stock closes basically on the after hours low, it usually goes lower. Just saying. But if for some reason this opens up higher than the after hours low, opening 5-minute low is your stop, and you could be long for a bounce. Maybe up to 153.95. Or maybe, I think tops is 156. After that, I'd be taking profits. That was the initial dump low. Probably a good area to book profits. If you want to be a little bit more scientific, and there's nothing wrong with that. I don't know who bought this up at 179. But look where the 38.2 is. 156.69. So I was pretty close. Actually, this isn't an exact render, is it now? So I was pretty damn close. 156s, 157s makes sense. I'd be out at the 38.2. That's usually where weak stocks bounce to. But there are going to be a slew of downgrades tomorrow. If I will say this, here's the caveat. If somehow PayPal gets itself green tomorrow and pulls a Robinhood, then the low is in, okay? But I tend to think it's got a little bit more pain to go. I think AFRM is actually the buy on this bloodiness, because they have, I just got a thing the other day for, now Expedia has a deal with them for buy now, pay later. I mean, they have so many new deals. They just got the Amazon deal going. I know online sales were kind of flat year over year, but I think AFRM picked up market share for a couple of reasons. One is that they got the, there was no layaway for Walmart this year, and that all went to AFRM. The bad news for AFRM is it's into resistance here at the 20 MA, but if they whack AFRM into the numbers, I mean, here's my question for you. This is when AFRM got all those deals. Now, it had all those deals into this quarter, and some going forward. We know their last number was a pop, but it couldn't hold, and it kind of flopped. We're all the way back down here. I think the risk reward here is long. I just do. Another one, by the way, like PayPal was match. I had been short and then flipped long and then got stopped out. This was another one. I'll just show you. I had been short, then I flipped long, and it was starting to work, right? It was starting to like really rally. Where was that? It was this year here, the beginning of the year. It was starting to rally. Once it couldn't hold here, I just kind of got out and it kind of started slinking lower. And I was thinking to myself, I'm like, this is down so much into the earnings. Should I try this long? And I was like, again, I said to myself, I was like, are you right or do you want to be right? And I was like, again, I kind of want to be right. And I knew immediately that it was going to go lower. I've been doing this so long. I don't know how to describe it anything other than that. Now, if this goes positive tomorrow and can hold, this is a very good company. And this will do very well after Omicron, and once you get into they own Tinder, they own Match, they have a really, really nice subscription model. And I don't want to say it's a monopoly, but I think that they do have some room to grow. So I'm going to be on my guard to see if this can flip from red to green. I think it already finished off the lows in the overnight. Yeah, well off the lows. This got down to 98. Holy cow. So I'm going to keep an eye on this one. If one of them could flip from red to green, this might be it. The low might be in Match. We'll see. I would have liked this down at 92. That was sort of where I was going to say, but it bottomed at 98. If it loses 98, forget it. It's going to go much lower. Alrighty then. So Amazon is rallying, obviously on Google, and everyone's hoping they're going to do a split. They really should. All of these stocks would reignite the NASDAQ if they did the split. They did the splits, and no one's positioned for that now, by the way. Nobody is positioned for that. That could cause some hell of a February. It could be like a nice Valentine's Day present for the market. All right, so we're up to 3080. 3126 was the old support where it broke down from. Probably a good area to book some profits into if it gets there. The 38.2, yeah, it's kind of close to the 38.2. The 20 MA has been the resistance in Amazon. So, yeah, I'd probably book a little profits at the 20 MA. I don't love that it's rallying into the number, but I will say this. Technically, if you're just going on pure technicals, it's a look below and fail. So this could go higher on their actual earnings. So just be careful if it rallies too much into the number. But here's my thing with Amazon. I think that I just don't think they had a great quarter. I don't think the holiday season was as good as everyone thinks. They say that in-store was kind of a disappointment and that online was flat. That was what PayPal CEO told Kramer in an interview before this disaster quarter. Honestly, I'm a little leery. This stock showed so much weakness. So I think their quarter's probably not going to be great. I just want to see how it reacts to that. I think I'm going to be a second mouse on this. If this wouldn't have rallied into the number, I probably would say it's a long, but the fact that it's rallying, I'm a little leery. Just saying. Now, speak of UPS, this was they boosted their dividend by like almost 50%. I think it was like 49%. Here's the thing. This could be a pro gap. What's a pro gap, you might ask? It's the gap like this that initiates the move higher. So what do we need to see for a pro gap? It number one has to take out the earnings day high. That's the most important criteria. And hold, by the way. The second is that it's got to hold here for like another couple of days, the 3-day rule. If we start losing the low of day, let's say Wednesday, today, this could start pulling back, maybe even filling the gap. So we're already at or a little above channel high. We've seen moves above channel high before, so it wouldn't shock me to see this keep going. But look, we came up from the bottom of the channel. We did that here. Granted, this took many days. It doesn't have the same shock and awe. But look, this was the exhaustion gap here to the reference high to the channel high a little bit above, and then it faded. This, though, didn't have the run-up. It had like a 2-day short covering rally, and then boom. So this could be the real deal, kind of like this. This did have a little bit of a run-up too, but then they sold it. It was at a breakout level, and then once you got through there, it really ran. So I'm going to eye this. I'd love to see it hold for like 2 or 3 days and then clear the high. So you'd want to see this day plus like 2 or 3 more, and then boom. Up there, it could keep going. If I was going to put an extension on it, let's see. Let's do it the other way. Let's say we doubled this range here. I know it's a little ambitious. Edit properties. Let's get rid of all this junk. Let's just be conservative and do like 2 times range. It's going to be a lot higher though, you'll see. Would be 263.35. Could that be it? Because look, this high here was defined by this high and this high. So I think this would be double the range. So if we can clear that high, I think you're good for another 30 points. We'll see. Starbucks. I think that Starbucks being down could be an opportunity to buy Dutch Bros. So Starbucks looks like it already recovered a little bit. I was kind of hoping this was going to get down into the 80s. Let's take a look at this. There's a few stocks. I was actually just having this conversation with my girlfriend over dinner tonight. I told her there's like a couple of stocks, or 3 stocks that the market loves, and they always buy them on the dips. Just take a guess what they are. I already told you one is now. It's Starbucks. What are the other 2? Anyone? Bueller? Disney and Nike. For some reason, those stocks, whenever they go down, they get bought. So Starbucks, let's keep it simple. If it can clear, I guess you could use 122. If it clears there, it's definitely going higher, in my opinion. Say row long. They couldn't even keep it down for just a little while. Really over 99.72, but this kind of a muted decline in Starbucks, not really that impressive. I was really kind of hoping we got down to the 81 level for the buy the dip, but no such luck. We'll see how this handles itself tomorrow. All right. It's got to get over that 20 MA. If we can, this could get back up to like 109s, probably the 50 MA, 108s, 109s. AT&T. I was talking about this with a follower today, and I had said that I thought AT&T was going to be a long in the beginning part of the year for a dogs of the Dow trade, and it did. It rallied, but I have to tell you, I sold the 20 MA. I sold it right up here, and my reason was a few-fold. One is this was an area where this stock had broken down from before, and there's dead bodies up here who are happy to get their money back. Number 2, it's so crazy that this happened, but this was just the trader in me. It was like the 200 MA, it's a good sale. And then I looked at Verizon. I was almost bought Verizon, and I looked at the dividend. I was like, it's only 4%. I'm like, T is yielding 8%. I'm like, I don't know if they're going to be able to keep it. I know that they have a lot of conservative boycotts on them for DirecTV, which apparently they're going to get rid of. And, because of CNN and all this, and Steve Bannon and a bunch of conservative commentators are leading this boycott on them, and I know it's got to be hurting their numbers. So that was in the back of my head also. I'd probably get back into AT&T closer to like 22. Here's the fear. What if they take it down so it yields 8% again? Yes, that's something to be concerned about. They did buy the dip a little bit today, but I'll tell you, if this loses 24.12, it's a short. I'm going to set an alert there. I'd love to get this thing coming and going. So last order below, row short. Maybe 4%'s enough for people here because they're also getting the Warner assets, which are good, but they're also kind of declining. Look where we bottomed here, though. Again, the 61.8. But here's the thing. This is the second test of it. This was the first. So if it fails, the chance of 100% retracement is on the table. So if it loses the low of day, I think it's a short. Electronic Arts. This chart, I really don't have an edge on it. I really wish I had something better to say about it, other than the last time it got up to the 200 MA, it was a little bit weak, and when it finally lost it, it was down. So it's got to get above and stay above the 200 MA. I know Activision, everyone's excited because of the Microsoft bid. I'm sort of undecided here. It's got a green channel. Let me get rid of this yellow, but we saw where that stalled here, right? So, but I'm not sure if we're in the green channel still or if we're in the red channel. So I think this earnings, whichever way this earnings goes, it's probably a go with. UPST, Upsta. All right, Upstart. I call it Upsta. Whatever. 20 MA. That was the last resistance. You're above it. I don't love that it's rallying into the number, because the last time they had earnings, it got the smackdown. So here's the thing I have about earnings. They usually, it doesn't in this case. They come in pairs. Usually there's a gap and then another gap. But look here. Here you had an up gap. Here you really had no move. It was like a pop and flop that went up. So I'll consider this an up move. And then here you were up again. This was really the gap and go. I think this area, if it does gap up to 165s, is going to be a lot of resistance again, because that's where this bounced to the last time, and this was where this supported. So if you're doing call spreads, this would be the end range, I think. So if you want to be long, just use the low of day or the 20 MA. 106.40 is the low of day. DWAC. So I did an interview about this stock with Bloomberg the other day. One of the reporters wanted to quote someone, and I guess they thought of me. That was very nice. I don't think she got the interview she wanted. But, you know, I was just talking to her about, like, technicals. You know, I think that I think it's a stock that's in demand because, you know, if you're a Trump supporter, there are 75 million people who voted for him in the last election, just 12 million from the first time he won. I'm not. I actually we got a little into that, but they're launching the Truth Social this month. So JP is a buy the cannons, sell the trumpets type of guy, meaning buy the news and, you know, buy the rumor, sell the news. So I think the stock will be strong into the numbers. The channel low is 52, so if you want to sell some kind of put spread, base it around there. If you want, the upside of the channel here is close to a hundo. So it's probably going to make higher lows and higher highs into the launch, and then it pops on the launch, and then you get out. Very simple. Have a great rest of your week. I will see you for the weekend video, which almost feels like it's going to be tomorrow, but alas, it's going to be late night Friday, early Saturday. Cheers.